Hello, and thank you for joining us today. I am Tim Lee, a research analyst with Red Cloud, and I'm joined today by Marshall Koval of Lumina Gold. Marshall, Lumina's Cangrejos project is in Ecuador, and we've seen Ecuador as a mining jurisdiction on the rise in recent years. What is the current political situation, and how is mining progressing in the country these days?
Yeah, that's a great question. Let me go back a little bit. When we entered the country in 2014, it was a leftist populist government, President Correa. Correa started bringing back mining after a mining mandate that shut down mining in 2009. So in 2014, you sort of had a regulatory and fiscal regime like the oil industry. Anyway, through four progressive presidencies since Correa, the mining sector has improved substantially. In the Moreno administration that followed Correa, you had 2 mines put into production. And then in the Lasso administration, you had quite a bit of regulatory reform, fiscal reform. And then now in the Noboa administration, mining has passed bananas for exports to move into the number 3 position, and roughly about $4 billion worth of exports a year from mining. And along with that, you have several projects right now that have been expanded. You've got Fruta del Norte that's been expanded over 4,000 tons per day. Mirador just announced recently a $625 million expansion of their mine to take it from 60,000 tons per day to 140,000 tons per day in phases, and that's a copper mine with some gold credits. El Domo mine, which was with Adventus, was acquired by Silvercorp. Now, if you remember, we had Luminex earlier this year. We merged it with Adventus, and then Silvercorp acquired us. So final permits are in place for El Domo, and Silvercorp is looking at putting that into production. And then you have projects like Cangrejos that are moving through the feasibility stage, the permitting stage, negotiations with the government on exploitation contract terms, which we just announced the other day. So we see things moving really well going forward. Now, as far as the politic angle, there's elections in February, and the 2 leading contenders are President Noboa, the current president, and then Luisa Gonzalez, who is with the Correísta party. Both of those candidates have been real pro-mining. They see the need for mining for direct foreign investment, so we think things will be good. Noboa has come out strongly in mining in the past since he came into office about 18, well, not quite 18 months ago, about a year ago. So anyway, we think mining is on a good path going forward, and there's some major investment that's going to continue in the mining sector.
Looking at Lumina's situation, Lumina recently announced some big news, both an extension of its Cangrejos concession until 2049, as well as the term sheet for the exploitation agreement. Can you give us, at a high level, obviously there's a lot of detail there, but can you give us at a high level some insight on what the terms are and what this means for the company for permitting and overall progress of the project?
Yeah, I think if you start with our published pre-feasibility study that we put out in 2023, that gave us a 2.2 billion NPV at a 5% discount rate using 1650 gold and 375 copper. And we assumed the 3% royalty. So basically, the deal that we negotiated with the government is we are at 3% until we hit $2,225 an ounce. So if you look at the pre-feasibility study, and we're working on the feasibility study now, we would probably use a long-term consensus analyst gold price or close to it. So that means basically in the feasibility study, we'll see the same royalty rate for gold. So the other thing that it does is it provides for, you really have 3 key things you need to do. You need to get the exploitation contract signed. Right now, we've got binding terms, which we announced and I just talked about briefly. Get EIS approved and deliver a feasibility study. And those are kind of the three gating items before you get an operating permit. So we're moving down the de-risking side of the project. We will have a feasibility study complete at the end of the second quarter of next year. And we're starting the EIS process coming up next year. So things are on a good path. Things are looking good for the project. And we're really happy with this announced deal, the extension of the concessions to 2049. And in addition, that concession can be extended another 25 years beyond that. So we're moving in the right direction here.
Now, you mentioned the pre-fees, and obviously it had pretty robust economics, an NPV of 2.2 billion and an IRR of 17.2%. And that was at a base case of 1650 gold and 375 copper. Obviously, commodity prices have been on the rise, particularly gold. Can you give us a feel for the impact of the rise in commodity prices?
So if you just look at the pre-fees and you do a 20% up case on gold from 1650 to 1980, that takes that NPV up to 3.5 billion, and it moves the IRR up into the low 20s. I think it's 22, 23 in that ballpark. But then if you go up to current spot price, you're all the way up over 4 billion NPV. So there's a lot of torque to the upside in the gold price. And with this graduated scale or sliding scale of royalties, we never hit 8% royalty until you go over $3,250 an ounce. So there's a lot of room for upward movement. And the royalty regime that we negotiated with the government in this term sheet, exploitation contract term sheet, isn't punitive. So we feel pretty good about it.
Now, you'd also mentioned the feasibility study as part of the upcoming steps for the project. How is that coming along? What work remains for completion of that?
Yeah, we're out of the field. We've completed all the field work that supports the feasibility study. That includes infill drilling to measured resource for the first 3 years of the pre-feasibility study construction. That was drilling on 50-meter centers, and we'll be able to report a proven reserve for those first 3 years of production. We also have done pit slope geotech, a big metallurgy program. We've done all the facility siting, geotechnical work, and layout. We're in the process now of, we've got the flow sheet locked down, the process plant engineering, pretty much at 90% level of completion. So we're moving into the costing phase, capital and operating costing phase of the project, and we're refining and finalizing the mine plan. And we're in the process of doing a marketing study and working with our marketing consultant, talking with smelters, potential off-takers, and working on that end of the project now. So things are going really well, and we're on schedule right now.
Great. And you mentioned talking to smelters and off-takers. Thinking ahead here to project financing, while most of the revenues would come from gold, Cangrejos would produce a copper con. And we've heard that there's a very strong demand from smelters for that concentrate. Have you, in your discussions with smelters and off-takers, is that potentially something that could help finance the project?
Yeah, I mean, there's the potential that you could look at prepays, you could look at offtake agreements with traders, the likes of Glencore, Trafigura. We've talked to all the major smelters in Europe and in Asia, Japan, China, Korea. And one of the things that's a real benefit with the concentrate that we would produce at Cangrejos is there's no penalty metals, there's no arsenic, antimony, mercury. It's a real clean con. It's a high gold content concentrate. So it's really more of a gold concentrate, but because of the copper content, we have to go with smelters that smelt copper. But there's quite a bit of interest in it. And then also behind some of these, the European and the Japanese smelters, you've got the export credit agencies behind them as well. So we're talking with those groups as well. So basically, if you look at the pre-feasibility study, you have to raise roughly $1 billion. The Wheaton streaming deal that we have commits about 252 toward pro rata towards construction. we'd have to go out and raise equity on the order of 400 or 500 million, and then you would look to offtake, smelters, other forms of financing for the balance of it. So there's a lot of interest. Your point about copper concentrates being in low supply, that's positive for the project, and the high gold content of our concentrate is going to help us out quite a bit as well in those negotiations.
Now, you already have the agreement in place with Wheaton Precious Metals. How much of that have you already drawn from, and how much funding could that still provide?
So related to operations in the feasibility study, we've drawn roughly 39 million to date. We have 48 million available to us, and so we have a 6 million draw coming up on December 2nd. One of the conditions to get that tranche was that we completed the exploitation contract term sheet. So that's in the pocket here. So that'll get us, this next 6 million will get us through the feasibility study, and then we have to sort of look at it'll carry us a bit past it, and then look at what direction we go with the project, how we continue to finance it. So we're in good shape right now.
Great. Well, thank you very much for your time today, Marshall, and thank you folks for joining us on the line today.
Thanks a lot, Tim. Thanks everybody for listening, and keep an eye on Cangrejos and Lumina Gold. Off we go.